Welcome to this explainer. If you've been watching the markets lately, you are probably feeling the whiplash from this completely chaotic mess of mixed signals. You've got bond yields doing one thing, tech stocks doing another, and inflation data throwing absolute wildcards into the mix. Well, today, we're going to decode these incredibly confusing economic signals. We're mapping out a massive macro domino effect. It's one that starts quietly in the bond market and ends right at the heart of the current AI bubble.
Okay, let's dive into this. We've got a structured roadmap today to untangle these messy market headlines. Section 1, Mixed Signals in Bonds. Section 2, Unmasking the Inflation Shock. Section 3, the AI Earnings Rug Pull. And finally, Section 4, the Trump-Xi Summit Relief.
Section 1, Mixed Signals in Bonds, a Global Disconnect. So here is the very first domino. We're looking at a central mystery playing out globally right now. In European bond markets, yields are actually dropping a touch. But then you look over at the US and Japanese markets, and yields are moving higher. Europe is simply not playing ball with the global theme here. It creates a highly confusing picture, kind of like a giant puzzle, for any investor trying to read the macroeconomic tea leaves.
Now, what's really interesting here is the overarching trend. Despite those mixed regional signals, analysts see a significant trend of bond market weakness ahead. As the quote points out, I think there's a lot more weakness to come over the coming months. Why? Well, because the bond markets are deeply worried about looming inflation. The recent US Consumer Price Index and Producer Price Index data are starting to hammer home a point that we literally just can't ignore anymore.
Section 2. Unmasking the Inflation Shock. Deep Supply Issues. The data proves this isn't just some statistical blip. Let's trace this supply ripple effect step by step. Step 1, it starts with disruptions in the Strait of Hormuz. Initially, many thought, okay, this is just an energy issue. And surprisingly, the immediate energy impact has been partially masked because the US has been executing extremely rapid releases from the Strategic Petroleum Reserve. But that can't go on forever. Step 2, fossil fuels. Step 3, we move down the chain into petrochemicals. And finally, Step 4, plastics. You realize this is a deeply entrenched supply chain crisis affecting the raw materials of countless everyday goods.
But hey, a supply shock is only half the equation, right? We are seeing compounding inflation factors. First, a huge wealth effect from the stock market. Second, a massive CapEx boost. And third, incredibly high fiscal expenditure. We've got a hot market with very strong demand colliding head-on with the massive supply-side shock we just traced. It's a perfect recipe for sticky inflation. Honestly, it's kind of like trying to put out a grease fire with a bucket of jet fuel.
Section 3. The AI Earnings Rug Pull. The Tech Bubble.
So, the crucial point is, with all those inflation storm clouds gathering, you'd think the stock market would be worried. Nope. Instead, it is an absolute party. The prevailing attitude is simply, just get ready to buy the dip. For the immediate moment, any dip in stocks is going to surge and quickly get bought up by eager investors. But the underlying warning here is that as this dynamic continues and those macro pressures build, those dips are progressively going to get bigger and far more violent.
And that brings us to this vivid, frankly terrifying concept, the earnings rug pull. Right now, we're in an AI bubble. Companies are projecting immense, sky-high earnings based on AI services. But the earnings rug pull is that inevitable future moment when these tech companies realize they are all competing for the exact same space. More importantly, it's the moment they realize their massive projected AI earnings far exceed the actual earnings of the client companies they are supposedly selling these services to. It's basic math, right? It's completely unsustainable, and ultimately, it's going to end in tears.
But timing is everything. Look at this quote. I don't think it happens until we get that earnings rug pull, and I don't think that happens now for another quarter. The bubble bursting doesn't happen tomorrow. Because we just finished an earnings season, the market effectively has a temporary grace period. The reality of those unsustainable projections won't actually hit the financial reports for at least another quarter. So, for the focused learner tracking timelines, the big AI bubble continues to inflate in the interim while we wait for that rug pull.
Section 4. The Trump-Xi Summit Relief. A temporary relief robin.
And this brilliantly illustrates our final geopolitical catalyst. Looking at the expected outcomes purely through the lens of the market, traders aren't anticipating a world-altering breakthrough. They're expecting positive headlines driven purely by relief, essentially relief that there are no catastrophic tail risks. We're talking about predictable platitudes like beautiful talk, maybe some customary buying of soybeans, and perhaps a few marginal chip deals. Crucially, none of this is game-changing. It's just a temporary relief rally. It is absolutely not a major bullish catalyst.
Let's move to and see how this builds into an exact chronological timeline. Point 1, the days ahead. We continue the short-term rally. Point 2, summit day, where we get that temporary Trump Z summit relief. But look closely at point 3, the weeks following. Once we get through the summit, the market's focus will snap right back to the unresolved macroeconomic threats, that sticky inflation and the bond market weakness. Because there was no real structural resolution, analysts expect a powerful, nasty swoon in the markets. And then finally, point 4, next quarter. That delayed earnings rug pull hits the AI sector.
So what does this all mean? It's a fascinating yet precarious setup, which leaves us with this ultimate question to ponder. Can the market survive the impending earnings rug pull, or will the underlying inflation shock burst the AI bubble before we even get there? These are the exact economic dominoes you need to be tracking over the coming months. Thank you so much for joining me on this explainer. Keep your eyes on the data, stay curious, and I'll see you next time as we continue to decode the world around us.